Hello, what's up, folks? This is a NQ trade breakdown that I just took today. So starting from a daily time frame, I think is the best just to look at the overall pictures, so you're not to zoom in, right? So immediately you see that the market, yes, it going to the downside. It's really bearish, but as you know, the market cannot just keep going forever. It at some point it have to pull back, and you can take advantage of it, right? So now I'm going to the 1 hour time frame. So immediately you can see that we have a equal highs right here, right, which is buy side liquidity. During the I would say 9:30, I was looking if price be able to go and take out this, but I can see that it failed to do that, right? So my mind immediately, when I see this price fail to do this, I know it's trying to create equal high. The process of creating equal high is that we have an all high and price try to go to it and fail and come back to the downside. When I see this fail, I know that we're going to go to the downside hard, right? So I go to a 5-minute time frame. I can see that the market going crazy to the downside, take out the sell side liquidity. I looking for trade to go to the downside, but the market just really fast, and I cannot jump in to the trade at all. And when the market come down to the downside and it take out this right here, right, sell side liquidity, I noted like few days ahead, I think that this low price is going to come down and take out sell side liquidity, and it does, right here, take out this low, that equal high, take out, and that's when I run to this right here. Okay, I immediately going to this low that it just got taken out, and I go to a 1-minute time frame. Okay, so I was waiting since here, right? We keep going to the downside, and if you look at it, we have a PD array, right? Fair value gaps right here is respected, come to the downside. Again, fair value gaps, go into it, come to the downside. So what I'm looking at here is that first, I'm going to write it down so you can learn. You can note it as well. You go to the chart and you're going to see what I'm trying to say here. So first, I was looking for a what? A fair value gaps, right? Why is that? Because when price break to the downside and create fair value gaps, if we come back and we close above that fair value gaps, we have a chance for reversal, right? So fair value gaps, or in this case you can say that is inverted, right? Inverted fair value gaps. I'm just going to say that. 2, we're looking for a market structure shift. Okay, market structure shift. Why is that? Because when we have a fair value gaps and price goes above it, creating what? A inverted fair value gaps, you cannot just take the trade. You have to wait for a market structure shift as well, right? And after that, you're looking for what? After we have a market structure shift, we have to wait for price to come back above previous low. Why is that important? Because the reason why you have to wait for it to go back to a previous above previous low, and previous low here, I mean this low, right? This low right here. This is, if the market is still below this red line, which is that low, I'm not going to buy, even though we have a fair value gap or inverted fair value gap and market structure shift. Why? Well, the reason, if you look at the market, right? Let's say this low here. You see this low? Price stay below it, it keep going. You cannot buy when it's in here, right? You want to buy when price above a low, because when price close below previous low, it tend to keep going. For example, right? If you look at this low right here, see that the body of it close below that, the next candle it go to the downside. You cannot buy here. If you buy, you're gonna price gonna take you out. Same thing with here, right? We have a low, price close right at that level, it open and keep going. You don't want to buy below previous low like that. Okay, you want to wait for price to push above that. That's when you have the momentum. Okay, so here we have a really simple fair value gap here as well, right? Price go to the downside, and here we have a fair value gap as well, and also here. So right here we have a fair value gaps and created a it turned into a inverted fair value gap, but I cannot take the trade here. Why? We don't have a market structure shift, right? We don't have a market structure shift. I cannot buy that, even though we have a fair value gap that turned into inverted fair value gaps. I cannot buy that. So I wait for price to go to one previous I want to see a market created a market structure shift and it goes above a previous fair value gaps, which right here you can see that price goes above it right there, right? Fair value gaps. We also have a market structure shift here. You see that we have a swing and it breaking right here. We have a market structure shift. Boom. We put this there. Create that. You can use this as a market structure shift as well. But I use this one because, you know, to me that one is enough. This doesn't have any market structure shift. We do not buy. Okay. Here we have a market structure shift. Price goes above it, and that's when I buy it right there. So this candle and this candle were entry my position. Why? Well, because one, we have market structure shift here. If you want to use that as well, right? This one is definitely more clean, and we have above inverted fair value gaps. So we have two confirmations. When I see that, I was like, okay, we in. Boom, I get in, and the market just drive to the upside. Easy, when we have this fair value gap here, just to be safe, I entry right there, or I exit right there, right? And also you see that the moment when I close the 11 AM candle just open, it go to the upside, but you see that it pulled back right now. So it's just get in, because I think when it opened the next candle, hourly candle, it could it could go up to the upside really fast, or it could go back to the downside really fast as well. So just to be safe, I exit all my position right there, and it was a good trade. It was, I think it take me around 12 minutes, right? Really fast. Get in and get out beautifully. I think I can hold this probably more, but today was just, I see this big move like this. I think it could be really dangerous, right? To get involved in this type of condition. So I decided to get out, and it was a really beautiful trade. Really beautiful trade, right? From a 5-minute perspective, really simple. We take out this low right here, right? We take out a 1 hour low here, equal low. Boom, beautiful, right? We take that out. Let me take this out. Okay, so after we take out that, you have to go back to a 1-minute time frame and looking for the two important factors, right? The inverted fair value gaps and market structure shift. If you'll be able to find that, you're good to go. And of course, you have to know where to exit, right? So for my case, I exit on this fair value gaps here, because I think price could reverse back to my position, because I entry a little bit too late here. The ideal entry is that we have a inverted fair value gaps. We do have one here, but it's just too small, right? Let's say we have a perfect scenario. We have a fair value gaps down here and the market structure shift here. If I entry from, let's say, here, I think I might be able to hold the market a little bit longer, because the pullback might not affect me as much, right? Let's say I entry here, it pulled back, it's not going to affect my position because it's a little bit far away. But since I entry here, is that if it pulled back to here, it's just too close, right? So I was like, okay, I'm gonna get out. But let's say you take a trade next time, you entry like way down here, and you see a fair value gaps like this, you might be able to wait for the pullback and might see a continuation. But just to be safe, I get out of that at this point here, which make me around 2 to 1 risk reward ratio, which is I'm really happy with. Today was really the price is just really fast, right? It's really fast. You can see here it's going up to the upside right here, coming right back really fast. And it's safe just to get out when this type of condition present itself. And yeah, it was a really good trade. 13 minutes and we're able to get out. So thank you for watching, and if you learned anything, comment to let me know in the comment section, and subscribe. We'll see you guys right in the next video. Thank you.